Grand Parade Investments is a Western Cape-based empowerment group which has interests in Grandwest Casino, Burger King, Dunkin Donuts and, as we've mentioned, Spur, taking up its holding in Spur to 25%.
So traditionally the Grandwest investment was the one that spat cash, and then all the other things were a little bit speculative, but it's starting to gather some momentum now.
Market cap 1.7 billion rand, price to earnings ratio of 178 and a dividend yield here of 4.2%.
So yeah, I mean this company's a pretty interesting one. It used to be mostly focused on gaming. It had GPI slots, which is basically those slot machines that you find in every, like you find a slot machine at the Galaxy Bingo or at the movies or at a bar. They used to run those, limited payout machines. So they used to kind of specialize in that, and then with small kind of equity investments in hotel and leisure and some of the bigger casinos like Grandwest. Then came Burger King, and the excitement around the whole Burger King story was so massive that these guys just decided, you know what, well that's the way it looked from my perspective. They were just like, okay, well there's a queue at the one Burger King that we opened in Rosebank, going all the way to St. David's. We are going for this. They bought the meat processing plant in Elsie's Rivier, which is basically it's the biggest meat processing plant in South Africa. And initially when they bought it, I don't know if you remember this, they actually had ambitions of supplying the rest of the world in terms of Burger King with patties from that meat plant. So it's a big thing. And then they also
were they overexcited, or do you think that they have got the right formula here?
So Burger King is very popular. I think it's doing exceptionally well for a new entrant into the South African space. They've grown their footprint significantly. They're starting to make money at an EBIT level, which is very promising, especially in the short time that they've had. But probably and very excited in the beginning, probably coming a bit back to reality as things stand now, but definitely also not lost there. I mean, it's still doing very well.
It shows the power of an international brand, Paul, and how quickly you can ramp up.
They also priced the offering at a pretty attractive level in terms of the bulk, so that got it going. And then there's Dunkin Donuts too, and we saw how well Krispy Kreme traded here. That belongs to 4 News. But Dunkin Donuts, I'm not quite sure how well that's going to go. There's Baskin Robbins, which is the ice cream, which comes as well. So these are exciting brands, and it does look as though perhaps some kind of combination potentially of Spur and Grand Parade might be in the offing, which will really then present the market with a sort of a famous brands in another guise. In other words, a multi-brand kind of conglomerate with different brands.
Well, given the size of the meat processing unit you've just referred to, maybe that is the back end to this whole synergistic relationship.
And that's why Famous Brands works. It has all these different brands, but they all get their cheese from the exact same place. All the tomato paste will come from that new place that they bought in PE. All the French fries is going to come from Lambert's Bay. So that's what works, and that's where you get margin and margin and margin and margin.
We need to look at the share price quickly here.
Bit choppy and a bit all over the map, and of course that does relate to the fact that the earnings haven't always been there, but the promise certainly is there, and historically it's paid out a few special dividends to its broad, economically empowered shareholder base. So
hot or not on
look, I was a bit scared of it in the past, and the share price hasn't been all that good, but I think I'm going to go hot on it on account of these developments.
Chantal?
Yeah. So it's its financial statements are pretty messy, so it's very difficult to get any sort of good
year-on-year
earnings
comparisons are very difficult.
Yes, and it's difficult to get some sort of earnings visibility as well. So from my perspective, that's something that's a red flag to me. So I would actually have to go for not hot, even though it looks super cheap on a discount to NAV basis. So its assets are worth more than its share price.